Well, the markets are open, and you might be surprised at how they're opening. That's why we're here. That's why we have live and instant quotes provided by Bar Chart. And as we look at our quotes right now, we are showing March corn this morning. Remember how flat we were overnight? March corn, 8 3/4 higher. Just a second ago, it was 9 cents higher. Now we're up 8 3/4 at 509 1/4. And just a couple of ticks from our high of the day. We have December new crop corn 3.5 cents higher at 433 3/4. Some traders would look at the soybean open agog this morning, I think is what the term would be. As we were flat overnight and barely changed at all, now we have March soybeans 25 3/4 higher. Remember the huge sell-off we had on Friday? Now they're higher, and now they're 26 1/4 higher at 1338. And you have September 15 3/4 higher. We're now at 1176 3/4. They're just shooting higher out of the gate on the soybeans here this morning and adding to it as we go. In the wheat market in Chicago, March now up 8.5 cents at 643 per bushel, within 2 ticks of our high of the day there. And keep in mind, overnight we had a low of 624 1/4. So we've almost bounced 20 cents off of that already. Let's look at Kansas City wheat. What's going on there this morning? We have the March contract 4 3/4 higher at 618 after a low overnight of 605 1/2. Big moves, big turnaround in the entire grain complex here. On the spring wheat trade, March now a 1.25 higher is all at 613 3/4, kind of dragging its feet compared to everything else, but still a little bit higher. It had been as low as 605 overnight, and now we're 9 cents off of that. Let's bring in Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky, and wow, what a move, especially in soybeans this morning here, Dewey. Everything's starting to rally this morning. What's going on?
Well, we had a pretty good shellacking in all three grains on Friday, and the overnight session, we saw the market on the defensive here a bit, and it just looks like, after we had the day trade open here, there's some bargain hunters that came in here and bought the market, so that's what you've got going here.
All right, let's take a look at the corn intraday chart as well. That was pretty telling on the soybeans. Kind of a similar looking intraday chart here, just a big spike. You can tell right exactly where the market opened here this morning. What about this wheat market here with the winter storm brewing out in the plains? One had to wonder if maybe it would put a little pressure on the market, but it's surging ahead instead. Is it just riding on the coattails of the surge in soybeans this morning?
I think that it is, too, and also the surge in corn as well. When I look at wheat, wheat last week looks like put in a fairly important top.
Oh, a top, you think? So that would be representing for how long?
It could be a very long time.
Really? Okay, what leads you to believe that?
Well, just looking at the pattern of the markets here also, too, when you look over at the dollar index looks like it's trying to put in a very, say, a major low here. So I think those are going to be some issues that are going to come and they're going to haunt the markets here in grains a bit, especially in wheat.
Yes, the dollar has been really dragging the bottom of the barrel here for quite some time. Dewey, we'll come back and we'll see if we have any excitement going on in our livestock trade. Remember, we have reaction to the cattle on feed report coming up in just a moment. I want to take a quick look at how we're opening up in the Dow. Sometimes that can have a little bit of spillover impact into our livestock trade. And just as a backdrop here on these quotes provided by Bar Chart, the March Dow futures down 222 points at 30,687 this morning. And Dewey Strickler was talking a little bit ago about the value of the dollar index. Right now, it is up 143 points on the March futures. We're at 90.355. And for those of you watching the crude oil market, too, March is trading 7 cents lower at 52.20. Well, remember, we had the cattle on feed report that came out Friday after the markets closed. And let's see how the trade is reacting today. So far, we have February live cattle 22 cents lower at 116.50 per hundredweight. April, though, 12 higher at 122.62. And June is down 40 cents. The deferreds are all under a fair amount of pressure, averaging about 50 cents lower. Now, if you look at the feeder cattle trade, that's where the placements number was about 4% higher than expected, and we had March feeders this morning down $1.32. We're at 142.82, and remember, we closed that contract limit up on Friday, $5 higher. That's that new limit that we're working with. We have the April contract down $1.20 this morning at 144.92, and keep in mind we're actually working with expanded limits. Let's look at the lean hog trade. We have February 15 higher at 70.07 per hundredweight. April down 5 cents at 76.10. The deferreds are mixed. So now that we're in expanded limits here, Dewey, on the feeder cattle trade, and you see that weakness this morning in there after going limit up on Friday, absorbing the cattle and feed numbers, what does that all tell you about our feedlot trade this week?
Well, it tells me that primarily when you look at it this morning, they're looking at the corn market. Corn market being up here, and also the bean market being up. I think it's more of a relationship factor to the grains than it is anything in the meats itself.
Isn't it true that we have some overhead resistance on the feeders now? They took out the recent highs, but they're kind of bumping up against resistance that would go all the way back to, I believe, August, maybe?
Yeah, I think we will get up there eventually and try to test them, and we might even go above them just a little bit.
Okay, well, Dewey, always good to visit with you. Thank you so much. Appreciate it. Dewey Strickler of AgWatch Market Advisors. Janet, with that, I will turn it back to you.